Startup Central, India's first and only daily show dedicated to startups, technology and entrepreneurship. I'm Chandra Shrikant coming to you from India's startup capital, Bengaluru, and let's take it then to the headlines on this edition of Startup Central. Our top headline this evening, Nandan Nilekani and Rohini Nilekani become the latest in a rung of corporate leaders to sign up for the Giving Pledge initiative. Now remember, the others who have signed up for this include the likes of Azim Premji, Kiran Shaw and PNC Menon. As part of this, the Nilekanis will give away over half of their wealth to philanthropy. And in Who Raised What last week, we tell you on our weekly funding meter, in terms of the deals, it looks pretty muted, but we also tell you why IDG Ventures is increasingly investing in late-stage deals. And in what could be a reality soon, you could travel in 23 minutes between Chennai and Bengaluru because Hyperloop 1 has signed an MOU with the state of Karnataka and will soon conduct a feasibility test. The concept, of course, is based on Elon Musk's idea of high-speed travel in vacuum tubes. And on our final story today, actor Alia Bhatt has turned an entrepreneur and an investor by investing in the startup. She's picked up a stake in fashion startup Stylecracker, a startup that helps users to buy what leading stylists are designing. We bring you a conversation with the founders of Stylecracker and Alia Bhatt on the show today. Over to our top story then, where we turn the spotlight on the art of giving because Nandan Nilekani and Rohini Nilekani have decided to sign up for the Giving Pledge, an idea mooted by Bill Gates many years back. Now, by signing up for the Giving Pledge, they've basically committed to giving away half of their wealth to philanthropy, either during their lifetime or through a will. Now, considering the primary source of wealth for the Nilekanis is the stake they have in Infosys, the estimated net worth for both of them is $1.7 billion. So half of that is going to go to philanthropy in the coming years. Now, they're not the first to sign up for the Giving Pledge in India. The other predecessors or the other precedents include the likes of Kiran Mazumdar-Shaw of Biocon, Azim Premji of Wipro, as well as PNC Menon of Shobha Developers. So that's four prominent names, all from South India and more specifically all from the city of Bengaluru, really leading the way when it comes to philanthropy. One explanation could be that all these people are first generation entrepreneurs, so perhaps they are more comfortable with the idea of giving back. But more importantly, as part of the pledge, Nandan Nilekani and Rohini Nilekani have spoken about how people who are wealthy have a duty to give back to society. And they've also spoken about how the spotlight is going to be on building societal platforms going forward. They've already started doing this in the primary education space. So I guess entrepreneurs who are interested in solving problems such as education, health, you know who to turn to in case you're looking for some funding to fund your social enterprises. Moving over to our second story on the show today, where we bring you a roundup of who raised what last week on our weekly funding meter. It looks like a pretty muted last week, not much in the way of deals. But interestingly, IDG Venture, which has, traditionally been an early stage firm, has started investing more in the late stage. We explore this and more with our expert Arun Natarajan of Venture Intelligence joining us from Chennai. Arun, take us through the numbers last week. On the face of it, pretty muted in terms of deals. What are the drivers and any reason why we've seen a slowdown as far as the deal picture is concerned?
Yeah, in the week of November 13, we clearly saw a big slowdown in terms of number of deals. We just saw around 5 investments worth about $30 million getting announced, which was obviously much slower compared to the previous week, where we saw as many as 15 investments worth about $70 million. Now, having said that, we've been seeing this kind of up and down in recent weeks. The nature of the deals, were actually quite interesting. Almost half the investment this week, went into just, Universal Sports Biz from existing investor Axel. They committed $15 million more to the company, which basically focuses on, sports memorabilia as well as, fashion goods, right? So that was a significant investment that got announced. Also a very strong $8.25 million Series A investment into fintech company Active.ai. And the interesting part about this company is, the round was led by 3 Asian investors, one from Singapore, which is Vertex, and one from China, Credities, which is a fintech focused investor, and then you had, Dream Incubator from Japan. We rarely have seen, it's kind of either or between these countries, maybe 2 Japanese investors and so on we've seen before. So here is a unique case where a Singaporean investor, Chinese and a Japanese investor are leading the round with existing investors IDG and Kalari Capital participating. So this company obviously is focused on fintech and within that in chatbots for banking institutions. So very interesting deal, and also followed by a set of interesting deals in the Wi-Fi space, AR, VR, as well as loyalty points management for consumers. So I would say even if just the number of deals, the spread is quite interesting, I would say.
Arun, one more interesting trend that we are seeing is IDG Venture, which is, organized as an early stage venture capital firm, is increasingly looking at the late stage deal space. Any particular reason to explain this, and what will this mean for, seed investments and Series A investment if a player like IDG Venture is going out and investing in late stage deals?
Yes, clearly the IDG's investment in Policy Bazaar last month raised eyebrows at our firm too, and we reached out to IDG, and Sudhir Sethi actually spent some time talking to us about how it's been evolving for them. Clearly in the case of Policy Bazaar, it's a very rare investment where IDG is actually following in PE investors, private equity investors like Temasek and Premji Invest, who already entered the company in previous rounds, and they are now co-investing with a buyout fund like India Value Fund. So very unusual investment, and from what I understand from IDG, this is going to be the case for them for at least 25% of their fund. Their 2 new funds they are going to dedicate to late stage tech investments, as they call it. While Policy Bazaar may be a very unusual case, they've said they've been doing this since the time they invested into Flipkart, ever since they in 2014, where they sold Myntra into Flipkart and invested extra money on top of that. So that is the call that they took, and it's been working well for them ever since they've done investment into companies like Yatra, which they took public on Nasdaq last year, and then they are now going public with another investment they made in Newgen Software in the Indian market. So from what I understand, the clear reasoning is the need for exits to happen faster, because at the end of the day, venture funds, depending on the size of the fund, it's all about the arithmetic, right? So typically IDG has a $200 to $250 million fund. They've clearly taken a call that to be able to showcase returns quickly, they need a few investments in late stage, and which will turn around in 3 to 4 years, while they continue to be early stage, predominantly early stage, but those companies will take time to mature. So what does this mean from a startup perspective, like you are asking? It clearly says that the bar for early stage investment has gone up quite significantly, and that's probably going to reflect in the strategies of other funds too. But if you look at it from a flip side, 2015 we saw SoftBank as well as Tiger Global being very aggressive in growth stage capital, and ever since they changed strategy in 2016-17, there is a vacuum left there. So there's only 2 ways to fill that vacuum. Either you have Warburg Pincus, Temasek kind of private equity investors come down and do your $20-30 million kind of investment, or you expect early stage guys, and IDG is clearly leading the way there, going up and doing bigger ticket kind of deals. So I think for an ecosystem perspective it's quite balanced, but startups clearly, have to realize that the bar has gone up quite significantly on the early stage side of things. So that's a reality that we saw swing to the other end in 2015-16. We saw a lot of early stage focus, but now it's more growth stage oriented, and the system is balancing itself at this point.
Thanks for that analysis as always, Arun. Hopefully, let's see what action we see on the early stage deal front going forward. But moving away from that to news that could impact you and me, hopefully if this goes through, because you could soon travel between Chennai and Bengaluru in flat 23 minutes. That's if the Hyperloop 1 takes off. Now, Virgin Hyperloop 1 has signed an agreement, an MOU with the government of Karnataka to conduct a feasibility test on whether Hyperloop can work to connect the cities of Chennai and Bengaluru. I'm sure a lot of people will be looking forward to that. And remember, the entire concept is of course based on Elon Musk's vision of high-speed travel using a vacuum tube. My colleague Rahul Dharma caught up with a top executive of Virgin Hyperloop 1 to find out how feasible this is going to be and when Bengaluru, Chennai will get the first Hyperloop. Listen into what he had to say.
To answer the question, we've announced today that we're doing a feasibility study with the state of Karnataka, which will be for about 6 weeks. And what are we going to look at? We're going to look at what are the best routes for a Hyperloop. As you said in your intro, what a Hyperloop does is it collapses time and distance. But then the question is, where is the optimum place to go from to? There are lots of urban areas. You could go east, you could go to Chennai, you could go to a port, you could connect the airports. So the question is, which is the route that would have the most benefit to consumers, to people who are moving goods, and to companies who want business people to move between, to airports, to take the load off the airports, and for freight from the ports. So that's what we're going to be looking at, and we'll have the initial findings in 6 weeks.
All right. So, tell us which routes will you really explore? Are there a number of routes that you'd be looking at? Also, in 6 weeks you'll sort of finalize the routes, but are you also open to interstate routes? You spoke about Bangalore to Chennai in a flat 23 minutes. I think that 23 minutes, that would really be a big savior.
That would transform things. Yeah, we are open to it. The sweet spot for Hyperloop is really between sort of 80 to 1,000 kilometers. That's really more than that, and you would take a large airliner, less than that, and there are alternative forms of transport. So we are looking at a variety of routes. In fact, the first part of the study is which routes would the Urban Development Department like us to look at. Then we take all the data, we look at the geology, because how easy is it to actually do that? One of the nice things about Hyperloop is because with the traditional train, the carriages are connected together. So if it has to climb more than 7 degrees, the weight of the train pulls it back, so it's not high speed anymore. Because our pods, as we call them, are not connected together, we can go 30 degrees. So what that means is we can look at a lot of routes, and we can look at long distances. And so, yes, one of the early ones that's been proposed is exactly that, which is Bangalore to Chennai, which we think would be 23 minutes, which everybody else thinks would be revolutionary.
All right. I know the myth around Hyperloop is it is expensive, and you'll tell me it's not, but how hopeful are you that the necessary government approvals will come by? Because cost would really play a factor. Would you want the government to collaborate with you, or would it really be an investment purely from your side?
So it's always about cost. It's not just, you can have as many benefits as you like, but if it's more expensive, then it's not good. So listen, we're the only company that has built a Hyperloop, so we're the only company that actually knows the cost, as opposed to theoretically saying what the cost could be. So we've built one. We know how much hours cost. Wherever we've done a study elsewhere in the world, and we've done about 14, we've compared it to the cost of high-speed rail on the same route. The net effect of that study is that the cost is 2/3 on average. Now, the price of high-speed rail depends on the route, the geology, the length, number of stations, etc. But the answer to your question is we're 2/3 of the cost. Now, remember that we only use power to accelerate the pod when it gets to 25 kilometers an hour because of the vacuum in the Hyperloop. We turn it off and it glides like a spaceship. So it only uses a fraction of OPEX. So over the lifetime of the project, the overall costs are 2/3 of high-speed rail. The costs are very, very low. There's no carbon involved. And that is one of the reasons why people are saying, I really want to assess this. Because if you can be cheaper than the alternative and you can deliver these huge benefits of time saving, and we're told that people in Bangalore waste 600 million hours a year in traffic. I think we can all relate to that.
I feel it should be tried because it cuts the time and travel.
Yeah, it cuts down your time.
So I think it's just still not commercially on. There is a risk element in that, which they should test properly outside India.
There's a lot of like traffic jams and everything in Bangalore. Which place you would prefer it to be on?
I feel it should be all around Bangalore.
Because
7 kilometers of travel, it's taking me 1 hour, 1.5 hours.
Yeah, it should be, because it takes a lot of time to travel in traffic, and it will save a lot of time for a lot of people.
So what benefits do you think you will get out of this one?
Well, saves time, of course, because for me traveling to work and back takes about 3 hours. So,
and which route would you prefer it to be in Bangalore or like interstate?
I think the most effective would be on Marathalli and Electronic City, because most number of people travel by that route.
I really think it should be bought in because there are a lot of people who when you take it for medical purposes and things like that, a train is not something which you can opt at that moment. So I think the technology which you're talking about is really helpful at that. Yeah.
There are a lot of people in Bengaluru there who don't just want Hyperloop between different cities, but also within areas of the city. You can imagine how dire the traffic situation is then. But on that note, let's take a break on this edition of Startup Central, and we come back with a celebrity interview. Actress Alia Bhatt, who has turned investor with her investment in Stylecracker. We tell you more after the break. And the final story on Startup Central today has to do with a celebrity investment in a startup. We're talking about actor Alia Bhatt, who's invested in fashion startup Stylecracker. Now, this startup essentially brings customers close to curators, stylists who will give you personalized boxes. And my colleague Arundhati Kursangi caught up with the founders of Stylecracker and Alia Bhatt to find out about what really lured her to this startup, the plans the startup has going forward to really scale up, make those style boxes available to a wider audience. Listen into this conversation.
Excellent thought, because we feel that a personal stylist is something that we all want to have that expert advice, when we wake up in the morning and we don't know what to wear to work, or we have an event to go to or an occasion. So it's just nice to have an expert advice, just telling you what to wear, how to wear it, where to find it. And that's how the idea behind Stylecracker came about. What we do is we provide a service. We take styling, we make it very personal to you, we make it very relevant to you, and we ship it to you in a box called the Stylecracker box right to your doorstep. And that's essentially what Stylecracker.
Yeah, so it's a surprise box, and we have a very good surprise here in the box. How did she come on board? How did you plan to get on board with them?
Little did I know that it's going to land up being a partnership, because I never really thought of myself being a businesswoman or being, an entrepreneur, or any of these words never came to my head. I don't have that kind of bandwidth. But this seemed like the best opportunity and the best first opportunity for me, because this is a space that I actually understood and actually care about. Like Archana said, and it was a beautiful idea that they put together. He said, how do you make this accessible to the people of our country? Why, it's really nice that we are looking stylish and all, but why be selfish? That's why I keep saying that now my stylist can be yours. Yeah. And that's essentially what Stylecracker is all about.
What target audience, do you hit at?
Our audience would be, fairly, or what we'd like to do for our audience would be fairly unchanged, whether we had Alia or didn't have Alia. Yeah. Alia is an investor in this company. She's a partner in the business. So the big difference is that she adds much more of a laser focus and a lot more accountability. And we actually pick her brains a lot because she has a deep understanding of the consumer and the consumer's needs and wants. But we have about 20% of our users are in the 40+ age category, right? Style is, it's evergreen. It's for everyone. Everyone wants to feel great and look great. And you see every decade you see 50 is the new 40 and 40 is the new 30, and that keeps going, right?
So how does the business look? How does the order book, look for you?
We've been actually doing the boxes for about 4 months now. We have around 12 to 15,000 customers who order on average between 2 to 3 boxes over a period of time.
What do you think? How does Stylecracker, stand in terms of the fashion market? Because there are many apps competing, many fashion websites. So, are you competing with any particular website?
The answer is very simple: no. We are not a fashion retailer. We are not a fashion e-tailer. We work with them.
I'm sure Alia must be busy with her film schedules and everything. But do you put her to work as well when it comes to Stylecracker?
Well, I think the journey has sort of just begun, and as of now, whenever I can take the time out, we do our meetings, and we catch up and brainstorm and all of that, and go over all the things. Obviously, they're way more organized than I am.
So I guess the USP of this Stylecracker is going to be that Alia Bhatt stylist could be yours if you sign up. But let's see how it goes. On the face of it, it looks like a very premium niche offering. Will it have takers across the market? Can it really scale? That's something we will know in the coming months. But on that note, thanks so much for watching ET Now Startup Central. Stay tuned for news and updates on ET Now.